I'm joined today by Mr. Abdur-Rehman Mangera, who's head of group risk benefits at Bryte Life. Abdur, good afternoon.
Good afternoon, Chris. Thanks for having me on your channel.
My pleasure. What I'd like to talk to you about this afternoon is more with regards to risk benefits. And I think many people have the perception that, it's just part of the employee benefits package. It hasn't changed over time. It's still the same stuff. And it may be not ranking as high in its importance as do other benefits, for example. But I think that's a bit of a fallacy, and I'd like you to shed some light onto that subject, particularly about why risk benefits are important, what have been the developments and the things happening in that market. So please lead us on that.
Thanks for your question, Chris. We're looking at group risk benefits. Generally, the market has taken initiative since COVID. So they're actually enforcing or informing employees a bit better in terms of the benefits that are available and how it impacts them. The tricky bit is obviously managing pricing and the impact that COVID had over the past few years.
Sure.
The group risk market itself, from a benefit perspective, hasn't changed much. More importantly is the acknowledgement and understanding that group risk is important, and the benefits that are available to employees is becoming more visible. As employers, obviously we need to manage cost, and that's where the emphasis has been for a long time. Looking at the pricing side of it, COVID has had a massive impact. I think most of the insurers have actually changed and adjusted their pricing accordingly. And looking at it now, it's more retention and new business. The retention side has led to a massive competitive edge, where insurers and different markets are playing to retain business and effectively pricing to get more new business. Coupled with that, you've got your PPR and POPI requirements, which is now getting more member information and disseminating that information to the members. So previously, you should only acknowledge that group risk is to the employer as a policyholder or to a fund as a policyholder. Here, you're actually obliged to inform members that this is the benefits that you have. So members have a bit more say in terms of the benefits that is offered. Obviously, payment and that comes through employer deductions, but it becomes a lot better for employees to understand that the benefits that they're offering is something that meets needs. So you're not necessarily just a death benefit. You're looking at disabilities, you're looking at rare disease covers, and looking at long and short-term changes in the market. Obviously, short-term side, we've had COVID, you've got pricing as a major consideration, which effectively just makes the pricing of group risk that much more competitive. Over the short to medium term, mental health has been a massive issue. And it's something that we need to consider, particularly from a sustainability perspective. So you want to offer benefits that people didn't have. So adding rare disease cover, particularly for employees, and managing your disability benefits a lot better. This obviously coupled with the effects of long COVID and the like.
Right.
So we need to manage pricing group risk a lot better and look at benefits that meet people's needs significantly. The industry, if you look at it from a disability perspective, we've looked at occupation-based disability, and that does meet needs. But the definitions of occupation with employer, with owner, any employer makes a massive difference. It's now shifting that because you've got a lot of SMEs coming up, you've got a lot of retrenchment still, given the current economy. We're heading into election cycle, not only South Africa, but globally. You've got India and some of the bigger countries in the world that would have an impact on South Africa. And that could lead to pricing adjustments, could lead to benefit reductions. And we need to cater for more your SME, so your 50 to 100 or 200 lives, is the people that we need to cater for a lot more. The funeral benefit is obviously catered through a myriad of benefits, so that's not a major concern. So from managing a funeral benefit to a death benefit, that's a lot easier. Managing benefit that impacts health and ability to work is a lot more complex and should be offered a lot more by employers.
Okay. Can I ask you, I mean, you mentioned COVID, and obviously I think the insurers did take a bit of strain as far as claims experience are concerned over that period. But then straight from that, if you say there's still this pricing war, and trying to acquire new business, how do those two play against one another? Because surely, if you've undergone a bad claims experience period, that's got to be reflected in your underlying rates, because you've got to adjust, you've got to survive as a business as well. We understand that. And then this dynamic of the sort of price war between the different players, I think, introduces quite a threat to that kind of situation in a way. I mean, is that a correct understanding?
The effects I think that COVID had over the period was quite a lot. The difference is the insurers that have had larger reserves releases. So you look at previous lives or previous profitability. So you don't necessarily have to look at the event. Yes, you do have to price for the event going forward, but you don't have to make a 50% adjustment now to cater for the loss.
Yes.
So it's looking at it almost what we did in the 80s with HIV, where initially it's a shock to the system, but it's taking time. 20 years later, you have a pricing model that's not elevating the price by 30 and 40%.
Right.
It's adding 5 to 10% to manage a disease that is manageable. So the same thing with COVID is over time, we'll see the results lessen. And I think that's the view that most insurers are looking at is we've made profits, we've got reserves that we could have released, and the members don't have to pay for it.
Understand.
So you're actually managing your risk a lot better and making it a lot more affordable. The other side is the bigger you book, the easier it is to cross-subsidize. And that effectively the nature of group risk.
Sure. 100%. And just touching on the price war, if you are prepared to talk about that, I just think it's a fairly unhealthy kind of situation to have that as a primary focus and sort of, minimize the importance of all these other factors, like servicing and continuity and things like that as well. So, it all comes into play, I think, in the overall scheme, and just focusing on price alone, I think, is not a healthy and sustainable strategy. Is that a correct assessment?
It is a correct assessment. I think pricing generally, I mean, you need to be competitive.
Of course.
But there's a difference between being competitive and being extraordinarily cheap.
Buying
to
business.
Win the business.
Yeah.
And making it sustainable doesn't mean that your price needs to be out 30 or 40%. It means that you can be adjusted 10% and manage your risk a lot better over the years. So it also leads to building reserves while wanting to build lower reserves so that you can manage sustainable pricing going forward. And that's very important. The price wars obviously become very difficult to manage, and it becomes an education perspective, particularly from a broker advice perspective, is what are you looking at? Price is a consideration, but the ability to pay claims, the ability to service appropriately and correctly, making sure that your data is managed appropriately, your claims is managed a lot better. If you take income disability as an example.
Yeah.
If you helping people get back to work, making them employable, having vocational rehabilitation in place, those are the type of things that you should be focused on, and not just can you pay the claim and can you give me the cheapest rate.
Yeah, 100%.
Effectively, if you look at all the insurers, there isn't a doubt that any of the insurers can pay claims. They're backed by the parent companies, they're backed by reinsurers. So effectively, all of them can pay a claim. Right. Just how quick can you do it? how well do you service your client? How well do you communicate? And that's the important side that is often missed in lieu of a price discount.
Understand. And just, last question as well. Is there a disparity in sort of the different terms and T's and C's, in terms of inclusions, exclusions, maybe definitions of certain things? Is that a big issue, or is there general sort of parity amongst the insurers as far as those sort of fine print and conditions and things concerned?
I think there is parity generally amongst insurers. The exclusions, particularly in the group risk market, is pretty much standard.
Right.
We also have the ASISA standards that dictate what minimum requirements are.
Got you.
So you're looking at those type of products where there is nuances, where definitions change from a occupation to a medical definition. Those are the ones where your terms and conditions would differ. But if you look at it across the board, I think across all benefits, most of the market is on par.
Right.
It's just nuances in terms of value-added services or additional requirements, but the benefit and the conditions are similar because it's a standard product. It hasn't changed much over the years. We're offering death benefits, and simply put, if you die, you get paid. It's just some of the things is suicide exclusions. Generally on the group risk side, it's excluded. On individual life, it's included.
Sure.
But you look at hazardous occupations. Generally on group risk, it's not specific to an individual unless it becomes part of their job or part of their hobbies that exceeds X amount of times.
Okay.
That's where I think the data and service information, our servicing side of it, is quite critical, because having more information makes it a lot easier for us to manage that parity.
Right. Now I understand that. So I think there should be a good balance. From what I hear from you, there must be a good balance between the pricing and the other considerations, not just something that can be seen in isolation and just do a quick little rebroken. Okay, so and so is the cheapest. Let's just go there. I think there's more to it that meets the eye, and I think just from a comparative perspective, number one, and number two, it is, at the end of the day, it is an important part of the benefit structure. It is not something that is just just a bolt on to the whole thing. It becomes very, very important, especially if you end up in a situation where you need those kind of benefits. Then it becomes the biggest thing.
Yes.
So people must just be mindful of that. Abdur, thank you very much. Yeah, that's been quite interesting. I'd love to continue with you guys and have more conversations like this going forward. I think it's important that we keep educating our audience, who are the ultimate beneficiaries of the stuff that we all do. So I think it's an important thing to do on a regular basis. So I want to thank you for your time, and certainly look forward to chatting to you more in the future. Yeah.
Thank you, Chris. It's an absolute pleasure. And yes, I do agree. We do need to educate people more in terms of benefits and what we offer and how we offer them. Thank you for your time as well, and appreciate it.
My pleasure. Take care. We'll chat soon.
Will do. Thanks.